Dalton market cooling off, here's what that means for you. Dalton's real estate market is showing signs of shift. And if you're a homeowner or you're thinking about buying, today's month's numbers could impact your next move. I am Josselin, Iraheta, Realtor on the northwest side of Georgia. Book a Calendly call with me in the description below if you would like to sell, invest, buy in the northwest side of Georgia, including Dalton. Now let's dive into May 2025 real estate market report for Dalton, Georgia. As of May 15, 2025, the median list price for Dalton, Georgia is $296,999. That's a big drop from just a month ago when we saw prices above 400K. I uploaded that last video on April 10th. Remember, the market action index is what we focus on. Last month it was 37 and now it's 38. So it's just a small bounce, but it's still a seller's market, which is overall stability. One of the biggest changes this month is how long homes are sitting. The average days on market has jumped to 117 and the median is at 84. Remember, the median, it's what's on the middle, and the average is when you add all of them and divide it by the number you added. So that gives you the average. And that's a clear sign that buyers are taking more time and sellers are having to wait longer for offers. Right now, 40% of homes on the market have had a price reduction. That's a red flag that's telling us many sellers are overshooting the market and having to adjust. For buyers, this means you got room to negotiate, especially on homes that have been listed for more than 60 days. And if we look at the rent, the median rent has risen to $2,095. So if you're renting right now, it might be a good time to compare monthly mortgage options. Last month, the median rent was $1,900. So right now it has gone slightly up. With rent increasing, what does that imply? And one of the things is that buyer motivation increases. Because if you're paying that much for rent, renters start considering, if I'm giving it to a landlord, I might as well start the process to get my own place. It also tends to pick up on investor activity. Higher rent equals better ROI, which is return of investment for landlords, which can attract investors back into the market. If they were not so active, this helps some people to become active when it comes to real estate investing. Even though prices have dropped, inventory remains tight. That's keeping us in the seller's market range for now. And with days on market rising, plus the 40% listing price dropping, that means buyer activity is softening. If inventory stays tight, this keeps prices supported even in slower markets. So everything has its positive and its negatives. And now I want us to focus on the price, actually the inventory of how it was. Last time I did it on April 10, but look at that, from April 4, it was 14. And then on April 11, it shifted. Now we're going to look at the trend for inventory. And this is how you can check year to year. So we're going to go at the beginning, which is, well, currently today. Well, not today, but the most recent, which is May 9th. Remember, this goes by weeks. And it drops one and it adds another one. So it doesn't go by the exact date that you log into Altos research. And this is for May 9th. It was 10. And then on May 3rd, 2024, it was 13. And then May 12th, 2023, it was 6. On the 90-day average, it collapses 3 months together, like it does the average. On May 13th, 2022, it was 7. So it's getting lower as we push back, as we go back in time. 2021, it was 4. And then now we have the year of the pandemic, 2020. It was 4. So we are doing better as of now. It's increasing. And we hope as the spring comes, it'll start increasing even more. Now, what this means for you buyers in Dalton, Georgia, or looking to relocate, sell or buy here, you have leverage right now, but deals are still moving, especially the well-priced homes. And look for price drops and properties sitting 60-day plus. With those, you can definitely ask for a price reduction. You can negotiate. Those are the gold mines. Also, if the market is like this, you have less urgency and therefore more time to think, and therefore more time to be strategic and not rush. And for sellers, well, we're still in a seller's market, but price and prep are everything. If you can stage your property, even if it's virtual staging, go for it. That helps. And also expect more competition on pricing, and you need to list smart and competitively to avoid getting stale. The more a home stays on the market, then more buyers will want a price reduction. And they start to question, why is this home not selling? And if you have watched some of my other market reports, I have stated that I'm going to start adding the national trends, because sometimes when we watch the news, or if you watch the news, it doesn't give you local, or not this hyper local. They give it to you nationally. So I want to start incorporating those and where I got the sources from. All this information that I get is from Altos research. And if you go on it yourself, you can see these numbers. But if you go somewhere else, it might be a little different. So that's why I wanted to stick to one reliable source. And Altos is always being updated, so I love them for that. And then my other sources for the national, I pull information from different areas, from different sources, not just one. So this is for single family housing, which is detached, and is nationally transitioning from a seller's market towards balance, and prices continue to rise, but at a slower pace. Inventory is up significantly, giving buyers more options, and the high mortgage rates near 7% remain a key challenge, severely impacting affordability for many Americans. They're not at 7%, but they're pretty close. I did this slide more visual, so it will be more appealing for you guys to watch and less boring. It's key, I hope so. It's key market indicators, and the median price, according to NAR, for the first quarter in 2025, it's $402,300, which is 3.4% year over year higher, which is great. That means home prices are building equity, and inventory is increasing year over year growth in active listings. And this information got pulled from ResiClub. I hope I'm saying that right. And the days on the market nationally, median in April, because we're mid-May, so they're giving us the full April month, is up from 37 in 2024. And I was also thinking of doing these because I've been doing them at the beginning and middle of the month. I was thinking of changing that to the last of the month, because we will get more information from that specific month that I'm doing. Like right now, we have half the info of May. We still need to wait and see what happens towards the other half. And then for regional price variations, it broke the United States into 4 parts. For example, where it says Northeast, that includes Maine, Rhode Island, Connecticut, New York, New Jersey, Pennsylvania, and others. Where it says Midwest, that includes Ohio, North and South Dakota, Minnesota, Wisconsin, Illinois, Michigan, and others. And where it says South, that includes us in Georgia, Florida, Kentucky, North and South Carolina, Tennessee, Mississippi, among others. And where it says West, that includes Colorado, New Mexico, Arizona, Nevada, Idaho, Alaska, and some other ones. So that's a breakdown of how the U.S. is typically divided into regions for markets or demographic analysis, and it will be those 4 usually, which is Northeast, Midwest, West, and South. Now the Northeast leads with 10.3% price growth, while the South lags, which is where we're at, 1.3%. Some Western states like Utah and Idaho are seeing price drops. For mortgage rates and affordability, current mortgage rates, according to Freddie Mac, for 30-year fixed is 6.76%. 15-year fixed is 5.89%. Rates remain elevated but slightly lower than May back in last year. In the affordability crisis, households earning $75,000 can afford only 21.2% of listings. 75% of US households cannot afford the median priced new homes, and that's understandable with not just homes, but almost anything being affected by inflation. 83% of non-homeowners cite affordability as a barrier. So more than ever, we need to be more cautious with how we spend our money. So we need to be prepared. Inventory trends, pandemic era, extreme inventory shortage drove bidding wars and rapid price growth. Now in early 2025, active listings up 30.6% year over year. So we're seeing a growth. Projected late 2025. This is what is expected, not guaranteed. Inventory approaching pre-pandemic 2019 levels, creating more balance. And I was checking some of them houses, and a lot of them have doubled the equity, which is great for sellers. But sometimes when you can't afford it, it kind of sucks for the buyers. Impact on buyers. If this keeps happening, expand inventory offers buyers a wider selection, reducing competition and enabling choices that fit their needs. There will be increased leverage, which means more homes. And there will be more chances for you to negotiate better prices and concessions, and affordability hurdles. High prices and near 7% mortgage rates limit affordability, especially for first-time and moderate income buyers. Absolutely. Buyers enjoy greater options and leverage, yet affordability remains a critical challenge requiring thoughtful financial planning. And I have a video that I did with a lender. You can check that one out. It has a lot of valuable information. If you consider that you don't qualify, don't disqualify yourself. Let a professional handle all your data and see where you stand. She will love to do a pre-approval for you. Her name is Sonia. If you click on that video, the information is in the description, and there's USDA and Georgia Dream where you don't put down payment. So you can get into homes with zero down. But check into that if you're interested in buying or selling. And if you're a renter and you don't know what you should do, I also have a video about buying or renting that is recent of this year. You can check that one out as well. And now let's see what impact all this has on sellers. We're on the national part still. Slower sales, home taking longer to sell as inventory rises and competition increases. Price adjustments, more sellers reducing asking price or offering concessions to attract buyers. And you guys have an equity advantage. Years of appreciation provide financial cushion for many existing homeowners. And there's the lock-in effect that some owners, they actually want to keep their mortgage because it's low, and then they don't want to buy at high rates, which is totally understandable. So where is this market heading? Home value is still growing, but not at a rapid pace. The shift in power moving forward, a more balanced market, you can definitely expect that. There's also persistent affordability issues. High cost continues to limit overall demand, and then increasing supply, inventory approaching pre-pandemic levels, which hopefully it'll help for those prices to come down and new buyers will have more options. The market is transitioning towards a balance. It's not crashing. Expect modest prices, appreciation, or stabilization with significant regional variations. These are the predictions nationally. So would you like to know how much is your home worth in today's market? Or are you a buyer and you would like to get a list of homes with price reductions? Whether you're looking to buy or sell, book a Calendly call with me in the description below. I'll be more than delighted to help you. Thank you so much for watching this video. Please share it with someone who you think will benefit from watching it, and I look forward to chatting with you and see how I can serve you. This is Josselin Iraheta with eXp Realty, serving Dalton, Georgia, and surrounding areas.